Considering everything that's been going on, economists from around the world think that a recession is around the corner. Now, I don't need to tell you this, but recessions are bad. People lose jobs, the economy slumps, and some people are affected a lot worse than others. So today, let's talk about two assets that are better than cash and stocks in a recession. Hello and welcome back to Tied to Wealth, where you're just one sale away from financial success. Why some economists think a recession is inevitable. Economists are keeping a close eye on something called the yield curve that serves as a key indicator to figure out whether a possible recession is in the cards for us. This curve basically tells the difference between how much money you can make from long-term and short-term bonds. If the economy is doing well, long-term bonds offer higher yields, but during uncertain times, when a recession is looming, short-term bonds become more appealing and take the lead. This shift is known as an inverted yield curve. When the yield curve inverts, it suggests that market expectations lead towards the Federal Reserve lowering its benchmark interest rates to inject more affordable money into the economy and counter an economic downturn. This expectation can significantly impact the decisions of individuals and businesses thinking about major purchases. Economists place a lot of trust in the yield curve's predictive power because it has historically been a reliable indicator of an impending recession. In the past, an inverted yield curve has usually been followed by a recession within a year or two, and it has been upside down for quite a while now. But that's not all. There are other reasons to worry about a recession as well. Since March 2022, the Federal Reserve has been taking steps to combat elevated inflation by raising its benchmark interest rates by 5 percentage points from nearly zero. As a result, this has led to increased borrowing costs for all kinds of loans, putting financial pressure on households and businesses. Adding to these economic challenges, federal student loan payments are set to resume, which means people's budgets are about to get tighter. This will also slow down consumer spending, which is an important factor that drives economic growth. And as if that's not all, Americans are still grappling with the effects of inflation over the past 2 years, with prices for groceries, rent and other necessities having risen rapidly. While these price increases have slowed since their peak in June 2022, they haven't gone down, leaving people dealing with higher bills. To make matters worse, many people have been dipping into the savings they built up during the pandemic, and when that well runs dry, they may be forced to cut back on their spending as well. Another warning sign of a possible recession is the leading economic index, which combines data on industrial output, employment, the stock market, and other factors to signal the direction of the economy. Alarmingly enough, this index has been falling since June and has been warning an impending recession for over a year, according to the Conference Board, a non-profit economics think tank that compiles the index. To put it simply, while there's always a chance that the yield curve could be wrong this time, many economists are taking these warning signs seriously and are not willing to bet against the possibility of a recession on the horizon. Now I've talked about why a recession is inevitable, let's talk about something else. You see, the US dollar is in trouble. This means that if the dollar crashes and takes a nosedive, then all of your investments that are made in the currency do too. So it doesn't matter if you have a carefully selected portfolio of companies that you've invested in or not. A struggling dollar could impact them all. But before anything else, let's talk about why the dollar might crash. Here's the thing, Brazil's president, Luiz Inácio Lula da Silva, had an interesting proposal during 2023's BRICS summit in Johannesburg. He suggested that the BRICS nations, which include Brazil, Russia, India, China and South Africa, should consider creating a common currency for their trade and investment dealings. The idea behind this is to try to reduce their vulnerability to fluctuations in the exchange rate of the US dollar. But before you start trying to sell all the cash you have for other currencies, here's something you need to know. This proposal comes with its fair share of challenges. These challenges stem from the significant economy, political and geographic differences among the BRICS countries. For example, Brazil's president says that countries that don't use the US dollar should not be forced to trade in it. He has also advocated for a common currency within the Mercosur bloc of South American nations. President Lula da Silva explained that a common currency among BRICS nations will provide more flexibility in their payment options and reduce their vulnerabilities when dealing with international trade. However, despite that, South African officials initially stated that a BRICS currency was not on the agenda for the summit. India's opinion on the matter is also different from Brazil's. The country's foreign minister mentioned that there was no specific plans for a BRICS currency. Russia's President Vladimir Putin says that the summit would explore the idea of shifting trade between BRICS members' countries away from the US dollar and towards using their own national currencies. China, on the other hand, did not make a clear statement regarding the proposal. President Xi Jinping did talk about promoting the reform of the international financial and monetary system, but that was pretty much it. Building a BRICS currency, as mentioned by South African Central Bank Governor Lesetja Kganyago, would be a complex political project. It would require not only a common currency, but also a banking union, fiscal union, macroeconomic convergence, and a mechanism for disciplining countries that don't adhere to the agreed upon standards. On top of that, a common central bank would be necessary, which brings up the question of its location. Trade imbalances within BRICS are another challenge. These countries primarily trade with China and have limited trade with each other, which further complicates the idea of a common currency. The desire for de-dollarization is not new amongst BRICS leaders, particularly due to concerns about the US dollar's strength and global trade dominance. The US dollar's share of official foreign exchange reserves dropped to a 20-year low in 2022. Still, it remains the dominant currency in global trade, particularly in nearly 90% of foreign exchange transactions. So, it's not going to be easy, folks, because the shift away from the US dollar would require a lot of participants, from exporters and importers to borrowers, lenders, and currency traders worldwide, to independently opt for alternative currencies, making it a complex endeavour. But nonetheless, this idea has been floating out there, so if you pair up the loss in confidence in the US dollar with the upcoming recession, then you could really be in a lot of trouble. However, you shouldn't worry about it all that much, because I'm going to tell you what assets you should buy to protect yourself as much as you can. And hey, Jim Rickards, an investment banker, agrees with me. Oh, and if you're enjoying this video so far, would really appreciate it if you could like and subscribe. Gold and silver. Jim Rickards and other experts are saying that we are going through a liquidity crisis. In such a situation, governments often take steps to protect their economies, even if it means affecting citizens, potentially leading to the seizure of assets, including your hard-earned money, which Rickards refers to as Biden bucks. Just imagine a scenario where all your funds are locked up in your account and you can't access any of it. Governments, having learned from past experiences and waiting to avoid bank runs, are getting ready for such a situation. This raises a crucial question. How can you safeguard your assets from the risk of government seizure? One strategy that's been gaining attention is investing in gold. Usually, when the US dollar is on a downward trend, the price of gold tends to rise. This means that buying gold can be a way to shield yourself from a potential crash. Demand for gold is already at record highs, as many individuals foresee a coming surge and are rushing to invest in this precious metal. The price of gold may become out of reach for middle-class citizens in just a few months, so if you're thinking about taking action, now might be the time to do so. Another option to consider is exploring gold stocks, but then again, that's tied to the dollar. So the smarter thing to do, which even Jim Rickards agrees with, is investing in physical gold bullion. But I get it, investing in gold can be extremely pricey. So if investing in gold is beyond your means, you could think about silver, which shares some similarities with gold. In fact, silver might even be a better investment. While gold is a solid investment, silver is a pretty big deal in our modern world. It's not just about looking shiny, it's incredibly useful. It's used in everything from electronics to healthcare, thanks to its unique properties, like being a great conductor of electricity and heat. and even having antimicrobial abilities. So, silver is like the unsung hero in many industries, but it's not just about its practical uses. Silver also plays a role in our everyday lives as a way to store value in things like jewellery and currency, and it's a crucial part of electronic devices we rely on. So as we shift towards a more technologically advanced world with solar panels, electric cars and tons of electronics, silver will rise in value a lot more than its current value. It's going to take time, it's not going to happen overnight, but it's still going to eventually increase. The one thing to note here is that currently, the price of the precious metal is volatile, so only buy it if you've got the emotional capability to hold on to it when there's a decrease or increase instead of panic selling. The thing is, these precious metals are often described as real money, and some even call them God's money. Unlike our everyday paper currency, these natural resources possess an intrinsic value that is difficult to manipulate or control. So, if you're trying to protect yourself from a recession, these are the best investments that you can make. There you have it, folks. Let us know in the comments if you think stocking up on gold and silver is the best way to protect yourself in the middle of a recession. See you next time.